You are welcome to this lecture, session 4 of Unit 2. And in this session, we'll be looking at the Code of Ethics. That is the ethical requirements for professional auditors. The Code of Ethics, the ethical requirements for professional auditors. By the end of this session, you should be able to describe professional ethical requirements for auditors with reference to the professional appointment, conflict of interest, second opinions, fees and other types of remuneration, marketing professional service, gifts and hospitality, and then the custody of client assets and objectivity. So these are some of the things we'll be looking at under this session with regards to the Code of Ethics of Professional Auditors. Now, auditors shall not knowingly, in any business or occupation or any activity that impairs or might impair their integrity, their professional competence, their objectivity, and even their reputation, or any activity at all that will be incompatible with the fundamental principles. If they have any idea of these, then they are not supposed to accept any engagement whatsoever that is going to impair their integrity, objectiveness of the service they are rendering, and then as well the good reputation of the profession as well. So in this regard, IFAC Code of Ethics have in two parts how professional accountants are to conduct their assignment and the specific requirements of accountants in public practices. So if there are no regulations, if there are no guidelines, then everybody will tend to do whatever he feels like doing. And as such, the International Federation of Accountants have established a code of ethics which is to guide the profession and then how activities are supposed to be carried out in the profession. Now, let's look at the threat to compliance with the fundamental principles. The previous session, we look at the fundamental principles where we said we have integrity, we have objectivity, professional competence and due care, we have familiarity, and we have professional behavior. Now, these fundamental principles, there could be a chance that the auditor complying with them will be very difficult at times. Now, there are a broad range of circumstances that may threaten auditors' compliance with the fundamental principle. So there can be a relationship with management, your interest in the company, and what have you. Now, these threats have been grouped into 5, what we call the self-interest threat, the self-review threat, advocacy threat, familiarity threat, and then the intimidation threat. Now, the nature and the significance of the threat may differ depending upon whether they arise in relation to the provisions of service to an audit client and whether the audit client is a public interest entity. And then when you are to give an assurance that the client is not an audit client, or in a situation where there is a non-audit client, threats might arise and your relationship or your dealings with these particular entities. Now, when we talk of the self-interest threat, the self-interest threat basically has to do with you having an interest in the client's company. and as a result of that, it's going to impair your objectiveness, how you are supposed to objectively review and assess the books of the client. For example, you have what we call, let's say, savings. You are a shareholder in that company. You loans funds to that particular client, and as such, your interest is in there, which is going to impair your judgment at the end of the day, and that will make it difficult to comply with the fundamental principles. Now, when we have the self-review thread, the self-review thread simply means you're reviewing the work that you have already done, like assessing your own works. So there are some instances where auditors perform non-audit services to the client by preparing its book and co. So when you prepare the financial statements of the client and you are the same person going to audit it, there's a tendency that you think what you have done is best, so you won't go into detail to review the books, and as such, because it has been done by you, it becomes assessing yourself and you won't go deep. Then we have what we call the advocacy thread. Now, the advocacy thread has to do with you turning to be the spokesperson of the client. Now, as an auditor, you are an independent auditor. You need to remain neutral. You need to remain independent. You need not to side with the client or any other party. You just have to remain neutral. Now, with the familiarity thread, has to do with your long relationship with the client. You being familiar with them, you serve them for a while, and as such, you don't go into detail because you work with them, you know the system and everything. When there is a need for you to perform in-depth analysis, you don't do that because of the familiarity you have there. Then we have the intimidation threat where, let's say, there is some form of undue influence coming from anywhere. This intimidation can arise from any litigation processes ongoing or threatened to be undertaken. So one party feel intimidated, especially the auditor. Instances are where maybe the boss of that particular entity, you used to work with him or her before, and now you are going to audit the books of that person. It's kind of dicey. It poses some sort of threat if you don't really stood your grounds. Now, what are the safeguards to reduce or eliminate this threat? Now, the safeguards to reduce or eliminate this particular threat to the acceptable minimum can be grouped into two categories. We have the safeguards created by the profession, the legislation, or regulations. Then we have the safeguards in the work environment. Now, the other one that can be added is the safeguard that has been created by the individual himself. Now, the safeguards created by the profession or the legislation or regulation, an example is educational training and experiences requirements for entry into the profession. So, if you enter into any profession, you have to pass through some educational training and gain experience. Then, when you are in the profession, there's also continual or continuing professional development requirements. You need to keep advancing yourself. Then we have the safeguards in the work environment. We have what we call the professional standards and co are coming to play. Making sure the entity also puts in place policies and procedures to implement and monitor the quality of control of the engagement. Now, the entity can also put in some measures to ensure compliance with the fundamental principles. So these are some of the safeguards that are there to eliminate the threat or to reduce it to its acceptable level. Now let's look at a professional appointment. Professional appointment. Now, before you accept any professional appointment, the client has to, in a way, assess and ensure that there is no independence or other ethical problems that are likely to cause conflict with the ethical code. So the auditor should ensure that they have been also appointed in a proper and a legal manner so that these fundamental principles will not be violated or they have to be complied with. Now, when it comes to engagement acceptance, before any specific engagement or client is accepted to work with, it has to determine whether acceptance to that particular engagement creates a compliance threat with the fundamental principles. Now, if the acceptance of the engagement is going to create this threat, then the possible safeguards must be looked at to be able to reduce it to its acceptable level, and if possible to eliminate it entirely. Now let's look at conflict of interest as one of the threats when it comes to the self-interest threat. Now, when considering whether to accept a client or when there is a change in a client's circumstances, audit firm must take a reasonable steps to ascertain whether there is a conflict of interest or if there is likely to be one of such in the future. So as such, the professional accountant must take reasonable steps to identify circumstances that could pose a conflict of interest, because such threat may create compliance with the fundamental principle, and then the safeguards to be looked at depending upon the circumstances has to be notifying the client of the conflict of interest and then obtaining their consent to act. So these are some of the two safeguards that are there in case there is a conflict of interest. Notify the party and then obtain their consent before you act. Now, aside that, there are some other additional safeguards that must be looked at. If the conflict of interest is there, you must consider the use of a separate engagement team, and then you have to also take procedures to prevent access to information to the person who is having that conflict of interest. And then there has to be a clear guidelines for members of the engagement team on issues of security and confidentiality. Then the use of confidentiality agreement signed by the employees and partners of the firm must also be looked at. Then if this also exists, the conflict of interest is still there, there has to be regular reviews of the applications of the safeguard by a senior level or a senior individual who is not involved in the relevant client engagement. So there has to be regular reviews. So if I'm having a self-interest threat and I've performed the work, that work must be subject to review by a senior individual who is not involved in the engagement. Now let's come to second opinion. Second opinion. Now, second opinions are basically opinions that are provided when a company approaches a member who is not that company's auditor for a second opinion on treatment of items in the financial statement. So you approach another member, and that member is, however, not a member of the client or is not the company's auditor. So you approach him to give you ideas on how certain items are supposed to be treated. Now, you going behind or beyond the scope, contacting that individual may create compliance with the fundamental principles. And as such, the member who wants to do that should obtain the company's permission to contact the company's auditors So if permission is not given, then the member should refuse to act. And this has to do with confidentiality of the information. So always permission must be sought. And if permission is not granted, then the member should refuse to act in that regard. Now, fees and other types of remuneration can also create um, a threat to the fundamental principles. Now, the audit fee is a sensitive subject for most companies because the auditors are not coming to perform the service free of charge. So it forms a sensitive part of the company. Now, it represents the cost for something the company often does not really want, and the fees may be perceived as too high just for this reason. Now, audit fees or auditing a company is kind of expensive and it comes with certain fees. So the auditors must ensure that they can provide a quality audit for the price they are charging. Now, sometimes it appears that firms are charging less than the market rate for the audit, especially when tendering for new clients. Now, it is not considered ethically wrong to charge a low price for an audit in itself, but the issue is that the auditor must ensure that they carry out an audit of the quality demanded by auditing standards and that the cut price, which is the audit fee, does not call their independence into question. So irrespective of the amount that is being charged, whether it is low or high, the auditors must ensure that they carry out the audit by the quality demanded by them by the audit profession. Now, the threat associated with this and how it can be achieved must be set by the auditor. So if because of the fee somebody will think it might impede your independence, it might affect the audit, you have to be professional enough to carry out these assignments that it will not affect the fundamental principles. Now, marketing professional services. Now, auditors are entitled to advertise their services and product. Now, the advertising medium should not reflect adversely on the member, any ICAG, or the accountancy profession. Now, there may be a threat to compliance with regards to the fundamental principles. And whilst you are advertising, you should not bring ICAG into disrepute or bring discredit to the member, firm, or the accountancy profession. You shouldn't discredit the service of others, and your advertisement shouldn't be misleading. Your advertisement should not fall short of the local regulatory or the legislative requirement. So you are permitted to advertise, but just make sure that that advertise you are doing should not fall short or bring a threat to the compliance with the fundamental principles. Now, there are some instances where gift and hospitality will pose a threat, which become a self-interest threat to the organization. So, as an auditor, you go into a firm or a client to audit the client, and the client offers you certain gifts or the hospitality, the care, the way they receive you during the audit process can pose a threat. Now, the issue here is that unless the value of the gift or the hospitality is trivial and inconsequential, a firm or a member of an audit team should not accept that gift and hospitality. Now, if the gift is substantial, it is more trivial, that is going to impede your independence, that is going to impair your the fundamental principles, then you should not accept this gift and hospitality offered by the client. Now, there could be some instances where you as an auditor, you are in custody of the client's assets. Now, the holding of the client's assets creates threats to compliance with the fundamental principles. Example, we have the self-interest threat to professional behavior, and then the self-interest threat to objectivity. Reason being that if the safeguard cannot eliminate or reduce the threat to an acceptable level, you, the auditor, shall decline or terminate the relevant engagement. So, an example of a situation where the auditor might be in custody of the client's assets is where the auditor is being entrusted with money. So, when this happens, the auditor shall keep such assets separately from the personal or the firm's assets, and it has to use such assets only for the purpose for which they are intended, and at all times it has to be ready to account for those assets and any income, dividend, or gains generated from the use of that asset. So the auditors might disclose all this, and if this cannot be handled, then they must terminate the engagement. Now, the auditor has to comply with the relevant laws and regulations relevant to holding and accounting for such assets. You can hold the asset, but in a situation is going to create a threat to compliance with the fundamental principles, then you have to try as much as possible eliminate it to its acceptable level. If not, then the threat must be fully eliminated if it is by declining the engagement. So in summary, we've been able to look at the professional ethical requirements for auditors with reference to professional appointment. We look at the conflict of interest, what second opinions are, the fees and other types of remuneration, the marketing professional services. We look at the gift and hospitality, and then the custody of client assets and objectivity. I advise that you go read the models to get more understanding. Thank you, and see you in the next lecture.